Mike Tedeschi, Wealth Management Advisor at Perspective Wealth Planning. With this week's market breakdown video, we're going to take a look at the four major U.S. indexes. We're going to jump in, take a look at the U.S. dollar and commodities. And for today, we're also going to take an in-depth look at the S&P 500 after the incredible breadth readings that we have seen. And we're also going to take a look at what's going on with the Dow Transports because it has set a 122-year record and what that could mean for us moving forward. Let's jump right into it here. The S&P 500 still trading up near those highs. Now, we had a little bit of weakness here this week on Tuesday when Janet Yellen was heard saying we needed to raise rates in order to kind of stop the overheating of the economy. That sent the market down pretty sharply intraday, but she did walk those comments back and the market made a bounce back up. Now, we're still trading up near those all-time highs, and as you can see, we've really not appreciated in price very much since the beginning of April. We had a big push up. Now we've kind of traded sideways here for a while. The really key important level to watch is about that 4,100 level on the S&P 500 to the downside and that 4,220 on the upside for that next push higher. If we jump in here and we take a look at the Russell still is trading inside this range. We have talked about it for a while. We've really had no price appreciations from the beginning of the year, but we had an incredible thrust at the end of last year. So trading sideways for a while and working through that incredible run-up is perfectly normal. We're still watching that 2360, and on the downside, we're watching that 2070 level. Now, when we take a look at the Dow Jones Industrial, made another new all-time high even after the comments that Yellen had earlier this week. Immediate bounce and continued to push up. We have seen that area of the market do extremely well here this year. When you compare it to the S&P 500 and the Nasdaq and the Russell, even the pullbacks that we've seen across the market have been much shallower, and it's gone and made new highs much quicker. This is still an area that we really like, and we're continuing to pay very close attention to as it looks like we're about to make another push to the upside. The Nasdaq, on the other hand, here doesn't look nearly as strong. We had a marginal new high put in last week, and since then we have fallen back down. So the S&P 500 essentially staying inside of this range, where the Nasdaq is broken below that range. Now, there is some key support in here at that 1330 level. That's really what we're paying attention to, at that 13300 level there in on the Nasdaq. And then the next support really comes back down all the way back towards this zone, which is really where we had the breakout from those highs there at the end of last year, if you can see. So we really want to see the Nasdaq hold on right here, but we're still seeing that kind of rotation out of tech into other areas of the market that are holding up. So it's not super concerning for the broad market at this moment when we have the Dow going ahead and making new highs. But if those other areas of the market start to look more like the Nasdaq chart, that might be a little bit more reason for a cause for concern, but we're not there yet. Let's take a look at the U.S. dollar. The U.S. dollar, again, still fighting around that 91 level. Look, we've talked about this now extensively for the last 6 months. We've really had no appreciation in either direction. We've had some push down. We had some pull back up. But we still have that trend of lower highs in place and lower lows in place over the course of the larger cycle here. And when we back this up and we look at it in on a monthly time frame, we know this is major long-term support. So if we were to break down from here, that would be concerning for the U.S. dollar, but right now we're still kind of holding on to that support. But we haven't seen a nice rocket higher like a lot of times that we've had, where we've made a bounce off of the support and then run for a while. So the U.S. dollar is still under pressure, and we are going to pay very close attention because we know how much of an impact that has across the board. Now let's talk about some commodities here. First, let's talk about lumber. All right, this one definitely needs to continue to be discussed. Lumber continues to push higher here. If we go back and we look at where we were a month ago at the beginning of April, lumber prices from the start of April to where we are today, up 75%. From the low of last year, lumber prices are now up over 550%. In just a little over a year. If we look at this on a weekly time frame, I mean, this is just way up at those all-time highs, way above everything else, and just continues to explode higher. You can see these weekly gaps in this contract here. This continues and will continue to play a big impact across the economy. It's going to put a ton of extra cost into new housing, which is slowing down those builds, even though we have the incredible supply and demand imbalance. So it definitely has an impact there. and it's definitely something we want to continue to watch. If this continues to push higher, that is a very clear indication that inflation is really there. Next, we take a look at copper. Copper is the other really important commodity to take a look at from a building perspective. We closed underneath the monthly all-time high close for April, but we're already above that zone here in May, and we are just a fraction, percent or two away from making new all-time highs in copper as that continues to act extremely robust. You can see breakouts, flags, breakouts, and now maybe we trade for a little sideways for a little bit and maybe another breakout to the upside. This chart just continues to make higher highs and higher lows and has done that now for over a year with really no signs of abating yet. Over that 450 zone is really key, and again, we're right there at that all-time high. We could really get that next push up. If we look at palladium is all the way up at those all-time highs. We're just off of it now, but that continues to break out and push. That's been incredibly strong. We take a look in at platinum. Platinum a little bit weaker than copper because copper's gone ahead and taken out that high from February, but this is still a very strong chart over the last year or so, and we are really fighting with multiple year levels of resistance at this point. So if we back this up, and I want to actually look at this in a monthly chart so you guys can see this. This is a zone where if we get back up above it, right in here from around that 1300 level, that next area is going to be that 1550 zone. So there's a battle that's happening right here. A push higher there in platinum would be very bullish at this point. We take a look in at gold. Gold obviously is not fared as well, but here we are. We laid these out on the chart. We've talked about this level. Very important. Underneath that 1670 level, I was going to change my mindset on gold. We put in a potential double bottom over a course of a couple weeks, holding this major level of support. We're now pushing back up, and it looks like we want to break back up over that 1800 level and move above that 1800 level. It's going to target that 1875, and then the big level for gold is that 1960 zone, so we're going to be watching that really closely. Silver continues to act really well. It's almost back up over 27. It's been much stronger when you take a look at a chart of silver versus gold. And again, silver being the viewed kind of as the higher risky because it has a higher beta, it moves more. When silver's leading, that's usually pretty good for the space. It looks a lot better than the gold chart does, where it's really just traded sideways from the end of last year versus gold making that big dip. So we're really continuing to pay very close attention to what's going on in these spaces as well. A lot of interesting levels at this moment. All right, I want to take a look at some data points. So when we look at the number of components inside the S&P 500 that are above their 200-day moving average, we have 96% of S&P 500 members above. That is the greatest month that we have had since 1928. Right, that is absolutely incredible, and this is a distribution of all the percentage of stocks over that 200-day moving average, and you can see we are all the way at the top right here. So we have seen incredible breadth in the S&P 500. Now I've talked about some breadth deterioration in the Nasdaq. That has not happened on the S&P 500. So let's now take a look at what the S&P 500 does after having those really strong breadth readings in the past. Now you can see when we pull this up that we run well for a long period of time, 2 months, 3 months, 6 months, a year, all better than average, random returns from any period that you take a look at. So that is some strong saying. But the odd piece of this is the S&P 500, when we typically tend to see these kind of breadth readings, is still way below its all-time high when it's having these kind of breadth thrusts. It's like kind of that bottoming pattern where you have that really strong move off the bottom like we had last year. These types of readings are a lot more common just after those kind of bottoms have been put in. And on average, the S&P 500 was still 39% below its all-time high when you had these incredible breadth thrusts. So this is a very different environment because we're all up at all-time highs with these breadth thrusts, and that is a difference than we have ever really seen in the past, and that is something we absolutely want to continue to pay attention to. Now I want to talk about the Dow Transports here, all right? So if we take a look at the Dow Transportation Index, I'm going to view this on a weekly time frame, right? We talked about these breakouts before, but let's look at how many weeks in a row we've been green now. 1, 2, 3, 4, 5, 6. I know this is a red candle, but it actually closed above because it gapped up. 7, 8, 9, 10, 11, 12, 13 is where we're at in terms of continued green action out of the Dow Jones Transports. That is an incredible run, and that is a multiple week win streak that we have not seen in quite some time. And here we've got this displayed on a chart. So consecutive weekly wins. We're at 13 on the Dow Jones Transportation Index, which is an all-time high record past what we saw in 1989. Now, the interesting thing is when we start really diving into this, 2 years out, the numbers don't look great. 2 years out, we have a lot of negative data points in there. The 1963 was the outlier with it green. 6 months, 9 months later, below that 50%, but not by much. A year later, it was positive. 3 years later, it was positive. 2 years out was kind of that tough spot for the Dow Jones Transports. Now, this is just looking at the transports. Now, let's take a look at all the different sectors after we have seen the Dow Jones have a 10-week in a row win streak. Right? It is pretty solidly positive across the board, and what I will point out to you, the best returns 2 and 3 years out historically when we've seen this have been healthcare. So that is certainly worth watching. Growth stocks 2 and 3 years out also did fantastic. Value stocks of 3 years out did fantastic as well. In fact, the majority of things looked really good 3 years out. When we take a look at the Dow Transports leading. And we've talked about it a lot, right? The transports are moving good through the economy. When they're doing really good, that typically tends to bode well for many areas of the economy. And that is why we like to take a look at the transport. So I thought this data set was really interesting. It gives you guys a viewpoint of some of the areas in the market that have done well when we've seen runs like this in the past. And so this is certainly something we want to keep our eyes on moving forward. Screenshot this if you want. Take a deep look at each of those different sectors and areas of the market for your own benefit here. Now, as always, guys, if you want to reach out to me directly, you can at mtedeschi at perspectivewealthplanning.com or pick up the phone and give me a call, 814-580-9881. Love to talk anything about the markets with you guys. If you have any questions, please let me know. As always, I hope you guys have yourself a fantastic week, and I will see you guys next week. Take care.